Hello everyone, welcome back to our channel. Today we're going to talk about a topic that's often asked about: using your 401k for a down payment on a mortgage. It's a tempting option, but it's essential to understand the ins and outs. So let's dive right into it. First things first, what is a 401k loan? It's when you borrow money from your own retirement savings account. The 401k is there to help you with a down payment on a home. However, it's important to know that not all employees offer this option, so you should check with your plan administrator. The minimum and maximum loan amounts can vary slightly, but typically you can borrow up to 50% of your 401k balance or $50,000, whichever is less. And the loan term usually is a maximum of 5 years, but it could be longer if you're using the money for a home purchase. In that case, it can extend up to 15 years. Keep in mind that the shorter the loan term, the higher the monthly payment is. That's something very important to keep in mind. The interest rate for a 401k loan is typically lower than the one that you get from a traditional lender, but you're essentially paying interest to yourself. The interest rate is often based on the prime rate plus 1 or 2%. And when it comes down to repayment, you'll need to make a regular, typical monthly payment. It's crucial to make these payments on time because if you default, the outstanding balance could be considered a distribution, which is subject to the penalties and taxes. Now, speaking of penalties, let's discuss them. If you fail to repay the loan according to the terms, the outstanding balance could be treated as an early withdrawal, which typically means you may be subject to income tax on the amount if you're under 59 years old. And you could also face up to 10% early withdrawal penalty. Now let's clarify what you cannot do with the money that you borrow from your 401k for a down payment. You can use it exclusively for the down payment, closing costs, certain home improvement, but you cannot do it to use for an unrelated expense such as vacation or debt consolidation. Before deciding to use the 401k for the down payment, consider the risks. You're essentially borrowing money from your retirement. There are alternatives to using your 401k for a down payment. You can explore low down payment mortgage programs such as FHA or VA loans, or look into down payment assistance programs in your area. Consulting with a financial advisor or a mortgage professional like myself can help you weigh your options out, all right? So to wrap things up, using your 401k for a down payment on a mortgage can be a viable option if you fully understand the terms and the risk, also the consequences that we just discussed. It's essential to weigh out the pros and the cons carefully and consider other options that are possibly available to you. So with that, thank you for tuning in today. If you found this video helpful, please give it a big thumbs up, subscribe to our channel for more informative content. As always, consult with a financial advisor or a mortgage professional to make the best decision for your unique situation. That's all for today's video. If you have any questions or topics that you would like for me to cover in the future videos, please leave a comment below. Until next time, take care, and please make wise financial decisions.